As widely expected, the FOMC last night kept US interest rates in the band between 0.7 and 1%. It was their succeeding comments following the announcement which drove volatility in the market. As widely expected, the Fed did note that the recent slowdown in the US figures, including a weaker March non-farm payrolls, along with a weaker US GDP reading last week, was transitory and temporary in nature, and it was blamed largely on the seasonal factors of the US. Immediately, if you look at the reaction of the markets to the Fed's statement, it was extremely the statement was perceived to be extremely hawkish. The US dollar index inched higher. Gold continues its sell-off. The USD Japanese yen hit our earlier target of 112.50, and US Treasuries were lower on the news. If we look at some of the details of the Fed statement, markets are clearly lapping up the news as hawkish, and we can expect these seasonal factors to be less of an influence on the US data docket going forward. Of course, tomorrow we have the headline US non-farm payrolls report. This follows a rather weak reading last month in which only 98,000 jobs were added. So we're going to watch how that number comes in. Expectations are for gains of 185,000. We'll also be watching that unemployment figure, which is expected to come at 4.5%. Now, the unemployment rate is a very interesting figure because the unemployment rate is showing strong gains amidst an improving US participation rate. So overall, in the long term, that's also a very good sign for the US economy. So any reading above 185,000 tomorrow, and we can expect the volatility to continue in the US dollar, and we could see some more gains. Of course, earlier through the European session today, we had an improving run of German PMI numbers and overall Euro area PMI numbers, and the euro has now moved higher against the US dollar and pared close to 70% of those losses from yesterday. Overall, we're expecting resistance to come into the Euro USD at 109.40 levels in trading today. And finally, gold. Gold has been on a very bearish momentum channel in the last week or so. It's already down 2.6%, and the weakness is expected to continue, especially if we see a better than expected non-farm payrolls report tomorrow. On a weekly, technically speaking, on a weekly channel, it's fallen into a weekly Ichimoku cloud. We're expecting to see immediate support coming in at 1235 levels. This will be followed by 1210 levels in the next upcoming days. Looking at the US session ahead, we do have factory orders due out that's expected to come at 0.4%. And of course, this will be the last key number along with the weekly jobless claims today before we have that headline US non-farm payroll report due out at 12:30 GMT. And finally, Fed Vice Chairman will also be speaking. We'll be watching his comments closely. We'll see how either hawkish or dovish he is. And again, this will continue to drive dollar in the days ahead.